Picture this. You're scrolling through your portfolio late at night, the room quiet, the glow of your screen lighting up your face. You tap on Soon, expecting the usual small fluctuations, but instead, your heart jumps. The chart isn't dipping, it's collapsing. Not a slow decline, but a brutal, cliff-like drop. And as you stare at those long red candles, you notice something even more alarming: massive transfers. Whale wallets, those legendary deep-pocketed players who almost never panic, are suddenly unloading tens of millions worth of tokens. It doesn't feel random. It doesn't feel emotional. It feels calculated. Like they knew something you didn't. Like they'd read the ending of the story before the rest of us saw the first chapter. But what exactly did the whales see? What were they running from? And why did they choose now to offload their Soon coin bags? Let's dive into the truth behind the sell-off, because the real story is far bigger than just a red chart. Imagine waking up, opening your portfolio, and instantly feeling that sinking feeling in your stomach. Soon is deep in red, far deeper than the regular market dips you're used to. At first you think, maybe Bitcoin pulled back, maybe the whole market is correcting. But then you start digging, and something immediately feels off. Whale tracker bots are firing alerts. Large holders, wallets that haven't moved in months, are suddenly pushing huge amounts of Soon toward exchanges. It doesn't look random, it looks coordinated. And that's when the real story begins. See, most retail traders only notice the final crash. They see the chart after the destruction, after the long red candles have already printed. But whales, they move long before the rest of the market understands what's happening. And the truth is, whales didn't sell their Soon because of panic. They sold because they saw something coming. The reason whales are selling Soon is not because the project is failing. It's because they saw a perfect storm forming, a major unlock adding supply, derivatives turning bearish, charts breaking structure, and the entire market bleeding simultaneously. They didn't wait to react. They didn't wait for confirmation. They moved before everyone else woke up. That's the real reason whales sold their Soon coin. Soon seeks to solve two big problems in blockchain. Chains don't talk to each other well, and transactions are expensive. Most rollups rely on Ethereum's EVM, making them slow and fragmented. Soon integrates Solana's virtual machine, SVM, into multiple layer ones, boosting transaction speed and efficiency. By separating execution from consensus, Soon enables faster processing and lower fees. Enter Soon, its cross-chain messaging system, removes the need for token bridges and wrapped assets, ensuring seamless blockchain interactions. Instead of patchwork solutions, Soon makes interoperability feel native and automatic. For developers, this means fewer limitations. Soon lets them launch high-performance chains on any L1 without being tied to Ethereum's EVM constraints. This creates more opportunities for gaming, DeFi, and other real-time applications that need speed and scalability. If widely adopted, Soon could make cross-chain activity as easy as using a single blockchain. The challenge is getting developers to migrate from the well-established EVM ecosystem to a newer framework. However, if it succeeds, it could set a new standard for how blockchains interact and operate. The SON token is set to be a standard native asset for the Soon ecosystem, used for governance, staking, transaction fees, and incentivizing builders and users. Unlike many blockchain projects, Soon launched with no pre-mined tokens for VCs, ensuring a fair distribution from the start. With an initial supply of 1 billion tokens and a modest 3% annual inflation, the goal is to balance growth with long-term sustainability. Over half, 51%, of the supply is dedicated to the community, fueling staking rewards, governance participation, and ecosystem incentives. Another 25% supports ecosystem growth, funding grants, partnerships, and developer incentives. The remaining allocation includes 10% for the team, 8% for airdrops and liquidity, and 6% set aside in reserves. A key feature of Soon's tokenomics is its focus on decentralization. Governance is entirely community-driven, allowing holders to vote on protocol upgrades, treasury management, and ecosystem development. Additionally, staking plays a role in securing the network while rewarding active participants. This model ensures that the majority of value and decision-making power remains with the users who contribute to Soon's growth and adoption.